Thomas Mathew joins us now. He's interim chairman for LIC, which is India's biggest insurance company. He joins us to explain that what is LIC's current stand on Indian equities, because LIC is India's biggest institutional investors. Mr. Mathew, good morning. Thank you for joining us. Now, LIC has invested about 33,000 crore in Indian equities last year. Given that Indian insurance sector is slowing down, how much are you planning to invest this year into Indian equities?
Last year invested about 33,000 crores in equity, and we will be planning to invest about more than 40,000 crores during the current fiscal in equity. Our total investment will be about 2,25,000 crores during the current fiscal, of which the major chunk will be in the government securities, bonds and debentures.
Mr. Mathew, given how traditional insurance schemes are making a comeback and ULIP schemes are not really selling, are you likely to reduce net commitment to equities then in the coming years?
This fiscal, with the economic growth, the easing of inflation and other economic initiatives being taken by the government, we feel will be a good fiscal for our investment. Last fiscal, we could generate a profit of 21,000 by churning our portfolio. And during the current fiscal, we expect about 25,000 crores of profit generation by churning our portfolio.
Right, but LIC has been a big seller in Indian equities to the tune of about $1.5 billion in this year. Now, what has prompted that? Higher valuations, or are you making space for government paper?
In government securities, we have the major chunk. As per the regulations itself, we do invest more than 50% of that. And every year in our investment, there is a major portfolio.
Right, LIC has been a buyer of just about every government issue, ONGC, NTPC, NALCO. Your investments in them have not been very rewarding. Any regrets on that front?
See, all our investment decisions are made after a lot of study by our research team. We have an elaborate, detailed research team in our organization which studies each script, each stock, each company thoroughly, continuously. And the investment decisions are taken on the basis of this research and by a committee of very erudite people. And also, our investments are all long-term. Our decisions are long-term. As a life insurance organization, our liabilities are long-term. So, when we look at it, I'm sure that all the investment decisions taken on each script are well studied and a right call.
Right, but sir, the big handicap for LIC of late has been that you've reached some kind of a ceiling when it comes to quality companies. So when do you expect the ceiling limit will be increased, and if the investment ceiling is increased in this year, are there any key sectors where you would like to increase your exposure to?
There is opportunity, but as we saw that LIC's investment is always in the blue chip companies, in the senior Nifty and the junior Nifty. And also, we are company specific. Investments are made after thorough research into every company's stock. Despite the various parameters of 10% or 23% or 30%, we generally do not go beyond 10 to 12% in a company. And that too after a thorough study of the stock.
So how do you see the macro side picture emerging going forward in FY14?
The India growth story is strong. The future market is here very much. We are seeing a lot of new economic initiatives from the government and also easing of inflation and economic growth. Therefore, we feel that it's going to be good future for the life insurance industry also. When we look at the life insurance industry, we know that the insurance penetration and density is low in this country compared to the developing countries and developed countries. So there is a huge market, untapped market, and huge potential for life insurance in India. We will be taking out action plan, putting in place systems and process for leveraging this untapped market.